Welcome to the Orca. The BC real estate market continues to slow thanks to the unprecedented government intrusion into the market. One recent report estimates the loss of equity at $89 billion over the last year alone, a number which would have a staggering impact on both the BC economy and the provincial treasury. Ryan Berlin is the senior economist for Rennie, and he's with us here in the Orca studios to talk about this. Hello there.
Good to see you, Rick.
$89 billion. Explain that number to me.
My off-the-cuff response is so what? So we've wiped $89 billion of paper equity out of the market over the past year.
It's not real dollars, is it?
It's not real dollars. It's not real dollars. This has not to do with transactions. This is based on a change in assessed values.
Right.
So, what Paul Sullivan has done with his report is stuck a number to a phenomenon that we're all aware of, and that is that there's been a slowdown in the market. Prices have come off. He attributes that loss in equity to government intervention, and that has certainly played a role. That might be a lot of it, whether it's the foreign buyer tax, speculation and vacancy tax.
Stress test?
Well, I was going to say the stress test probably has the most impact,
Exactly.
and it wasn't imposed by a government per se. But that definitely reduced purchasing power, so it reduced demand in the marketplace. So I think that one thing that gets missed is that it isn't, the policy has had an effect, but we were living in a market or experiencing a market that was unsustainable leading up to early 2018. Prices were rising too quickly. There were too many transactions. Demand was too robust given our population and population growth. So we knew that we were going to come off a little bit as well. And it just so happened that then the provincial government and federal regulatory authorities piled on the interventions as the market on its own was already starting to cool. So I say, so what? We lost $89 billion in paper equity in this market because unless you were somebody that bought with a minimal down payment of 5 to 10% in the last year and a half, for somebody like that, they might be underwater right now, right? Their home might be worth less on paper than their mortgages. But again, unless if they're willing to stick it out, and this is a home that it's their principal residence, and they're willing to live in it for 5-10 years, then I say they're no worse for wear, over the long term and maybe even the medium term.
But Ryan, at the same time, that number does have an effect on the bottom line in things like land transfer tax and legal fees that are associated with all of this. They're also going to take a hit.
They already did. So again, this comes back to assess the stock of value that's already in the region. Definitely the slowdown in sales that we've seen, both on the new construction side,
right,
but also in the resale market over the past year and a half. That has fundamentally changed that landscape of expectation around the property transfer tax revenue that the provincial government is expecting to get, and they've revised their estimates down going forward. And it has all kinds of knock-on effects. I will say one thing, something that we call in economics the wealth effect, is that when you own assets that are going up in value, even if you don't realize that value directly, it does give you a little bit of an incentive to spend more money day to day. So retail spending often, when a housing market is expanding or is robust, retail spending is as well. And as values come off, people, and some of it is real, people are accessing home equity lines of credit, but some of it is just a perception thing. So as the markets come off, we have seen a slowdown in retail spending on wholesale trade, home furnishings, landscaping, that kind of thing. So there is a knock-on effect. But again, I think what Paul did is kind of put a bow on something that we were all aware of was happening around us.
We're also reading in a report issued today that housing starts are off and will continue to drop up to the year 2021.
Yeah, it's very possible. If we look at what is happening with pre-sale activity now, so these are homes that would be selling now prior to construction that would be built over the next 2 to 3 years.
Or that have already been sold and waiting for the building to be completed.
And typically we will see those homes built. There are very, very few instances of developers abandoning projects after moving through their sales program. But to the extent that these the current pre-sale activity reflects future construction activity, we will see a slowdown in new starts, particularly on the multifamily side. And the provincial government themselves, in their most recent budget from February, since then actually have revised down their estimates for starts going forward, that we'll see fewer and fewer over the next 1 and 2 years. So, there's this feedback loop then of a lack of supply as prices are coming down that will eventually manifest itself in a rebound in prices at some point.
It becomes a self-fulfilling prophecy. You would think that they'd want to build more units when the prices are low, materials are off, everything's down, the economy is depressed. You build them now so that when the cycle returns, the housing the stock is there, but they don't do it that way.
Well, and that's one really interesting feature about this downturn is that it's not there was no external or internal, for that matter, economic impetus to this downturn. Our unemployment rate in this region is at a historic low for all intents and purposes, and we have the lowest unemployment rate across the country for metropolitan regions. So what that means is builders don't benefit from extra capacity in the labor force that they can then employ at a lower cost. The costs are still elevated. So with costs elevated, revenue essentially capped for a development with a certain floor space associated with it, it makes it really challenging to make the numbers work. So we've talked about this before, but there have been a lot of demand interventions on the demand side by the government to suppress demand and bring prices down. But we haven't seen that commensurate supporting of supply to even out some of the ups and downs that we see in prices.
Where do you see this going then? Look into your crystal ball and tell us where you see this going.
Well, I think somebody said the only purpose of economic forecasting is to make astrology look respectable. So I'm not going to go out on a limb and predict where prices might be. But what I will say is, what the headlines are missing right now? They're missing a turnaround that's happening beneath the surface. So it's very easy to look at, the resale market, which gets widely reported on every month, and look at it and say, hey, sales are down versus last year. That much is true. That's not important to understand. That helps us understand where we are, but it doesn't help us understand where we're going. And for the where we're going part, we need to look at more recent changes. Is the trajectory of the market changing? We've had 4 consecutive months of increasing sales in Metro Vancouver on the resale side. In April, we had more sales than in any one month since last July. We're also seeing benchmark prices for condos increase 3 consecutive months after about a year of month-over-month declines, and townhomes are doing the same thing. So the headlines report on year-over-year activity that is depressed, and it's reported on as a downward trend, and it's not that at all. So I do think what we're seeing is buyers starting to come off the sidelines a little bit, and maybe not trying to pick the bottom of the market to buy, but to say, hey, you know what, conditions are better now than they've been in two years. You could argue that even in the past 10 years, there hasn't been a better buying opportunity than right now. So I think some people are starting to see that, and I think as we move into the fall, we're actually going to see the market move back towards what we saw in 2018.
Are the banks and the financial institutions, are they willing to play right now? Or are they doing serious risk assessment because a lot of people may default?
They are. I mean, at an individual household level, mortgage arrears rate are at an all-time low as well. So current homeowners can afford their homes. They're not defaulting on their mortgage. When it comes to
it's the people though coming into the market that you have to concern yourself with.
And we have the against their will, the banks are having to play by the rules imposed by OSFI, which specifically means adhering to the stress test, which means that buyers have to qualify at a higher rate than their contract rate. And so that makes it more difficult for new buyers to purchase.
But it's not just the buyers, it's also the developers. And some of the smaller developers are really finding it a tough go right now.
They are, yeah. If you're a developer in this marketplace that hasn't had a foothold over a long period of time, or you don't have a big portfolio currently, it's become very challenging to get financing. And I think where you do see projects being delayed because of the market, or canceled, even if there's been a couple of instances where projects, and I'll stress only a couple, where projects have been canceled after the sales program. It's the smaller developers, like the bigger ones, the household names, the Bozas, the Concord Pacifics, Polygons, Concert, so on and so forth. There's many more. Townline. These guys have a good foothold in this market, and they're continuing to build.
Where are we then? We're still going down?
I think what we've seen is a bit of a convergence between the pre-sale market and resale market in terms of prices. A big premium had opened up between yet to be built product and available. So that has closed to more historical norms, which I see as being another indication that the market has normalized. Because that's what I've been describing this as. It is a downturn in that the lines have turned down. But really, we were in an unsustainable environment, so we've normalized.
The correction.
This is sure, we can call it a bit of a correction, I think. I do see us potentially having already reached an inflection point. By that I mean that demand is starting to resurface and we're seeing values start to come back up, particularly on the resale side. I've said this over and over and over. You can try to suppress demand as much as you want. People continue to move here, 35 to 45,000 people a year on a net basis. Not to mention the demographic changes we're seeing with our existing population. People are getting older every year, demographer's golden rule.
I've noticed that.
Yes. We're still having kids. We're getting married, we're getting divorced, we're dying. All those dynamics create different housing needs. And so we can hit the pause button for a short period of time, but eventually that young couple who had a kid that lives in 600 square feet in Kits, eventually they need that townhome in North Van and they'll make a move.
Always fascinating to speak with you, Ryan. Thank you so much.
Thanks, Rick.
Ryan Berlin on the Orca.